here at the headquarters of Colgate-Palmolive India, and with us is Prabha Narasimhan. You seem to have had a Midas touch. Things are just, what do you call them, getting better by the day and likely to get better as well?
So I think that's very kind. I'm not sure it's necessarily the truth though. What we have done over the last little while though is to really focus and double down on the fundamentals of FMCG, which is really superior product, making sure we have good communication, and then making sure that the right product is available in the right store. And that's pretty much everything that we focused on for the last year.
Well, that's what you guys have been focusing on. But if I could, ask you about the external environment right now. How is consumer sentiment in rural India, in urban India, premiumization as a trend, everything that we talk about? How are those pockets doing?
So I think immediately after COVID to around the middle of last year, the oral care category in general across toothpaste and toothbrush did see a dip as inflation really pinched and consumers cut back on everything that they felt they could cut back on. What is fantastic is over the last few months, we are seeing it come back. Urban volumes are now in both toothpaste and toothbrush positive over the same period last year. Rural volumes are inching back to being positive, which is great. I think inflation cooling off is helping this entire thing of consumers realizing the importance of oral care and coming back to those categories. And the macroeconomic indicators are certainly providing some green shoots, which we hope will continue over the coming months and quarters.
So the next few quarters, suffice to say, would be a lot better than what the first quarter was, which wasn't particularly bad. It was pretty good.
So our understanding is that the macro and indicators suggest that things will steadily only get better. So we are certainly cautiously optimistic about that happening. And along with that, we do hope that the oral care category will benefit as well.
And what about your own cost levers going forward? I mean, do you see a lot more expansion on the gross margin front, which will then be reinvested into advertisements? How does that work?
So what we have seen, and you would have seen it in our last quarter results, that margins have expanded at quite a sharp rate, helped by 2 or 3 things. Firstly, by the cooling of input prices, which certainly helps us. Secondly, by judicious pricing that we've been able to take. And thirdly, what this company is really good at is what we call funding the growth, which is about finding all of the wasteful costs and the things that we can take out of the system, which then allows us to invest back into our brands and into our business. So the combination of these 3 things has led to the really good gross margins that you see. And that is something that we expect will moderate. The gains will moderate, but we do expect that we will get marginally better gross margin as we go along. And we do expect to invest more in driving the top line of our business.
So what happens to the EBITDA then? That stays constant, or does that increase in line with the gross margin expansion?
So we don't have a stated position on EBITDA. What we are saying is that we will put in as much money as is required to fund the growth that we need in terms of driving top line growth. EBITDA margins are already really healthy. So the effort will be to maintain them there and thereabouts in the ballpark of where we are at.
A category as penetrated as yours, the big top line levers would, one, be increasing usage, second would be increasing your market share, and third would be going up the value chain in terms of premiumization. What are you focusing on and how much?
So as the market leader, I don't think we have a choice to focus on one or the other of these, Mangalam. So firstly, we are about half the oral care category. So, and we do see it as our job to grow the overall oral care category. And we are committed to, as a philosophy, better oral health for all of India. So that's, I think, driving the oral care category by driving usage. I know I've said this before, but only 20% of urban consumers brush twice a day. Almost half of rural consumers don't brush every day. So moving these two and driving category consumption really is important to us. The second is we have huge opportunity to grow share of our core brands, which is Max Fresh, Colgate Strong Teeth, and Colgate Active Salt. So that becomes then the second pillar of our strategy. And the third one, like you rightly said, is going up the value chain into things like, for example, Colgate Total, which is something that we are very keen to invest behind. We've already started investing behind Visible White last year. We have a new gum launch in PerioGuard, which again is at a premium. So we have a lot of offerings coming at the premium end, which becomes then absolutely the third leg of our strategy.
And what about the non-oral care bit? I mean, you have stated that you want to increase your share of revenue coming in from the personal wash and personal care categories as well. Also leverage Palmolive of Colgate-Palmolive. How does that come about?
So that becomes then the fourth pillar of our strategy, which is really about diversification and getting more business outside of oral care. The first port of call on that being Palmolive. Palmolive is an underserved equity in our portfolio. It actually has about 67% awareness in this country, which is quite incredible when you think about all the new brands fighting to gain awareness. And when you have a brand in the portfolio that already has 67% awareness, we've done a little bit of work on this brand to understand root strengths and where it has the right to compete. And we've realized that it works, it sits in the area of cleansing. So body cleansing, hand cleansing, and that's where we're going to double down and put some effort. We have a huge global portfolio and a global product technology in Palmolive that we intend to start bringing into India and driving, which really becomes the cornerstone of our strategy along with good communication.
So if you could put some numbers, what proportion of your revenue, say, comes from oral care, in that it's toothpaste, how much of that comes in from toothbrushes and other stuff, what comes in from Palmolive, or rather personal care, and where do you like to see that mix going forward?
So without giving you, because we don't break the numbers up, what I can tell you that absolutely
range maybe.
The bulk of our business sits within oral care and toothpaste and toothbrush. A small proportion of our business sits in Palmolive, and our effort is really to grow Palmolive at least twice as fast as the rest of our business, and therefore continuously keep increasing its share as contribution to our total business. Just some facts though, we sell I think 2.2 billion tubes of toothpaste and nearly 800 million brushes. So large volume sitting in both of those. And then like I said, a relatively nascent Palmolive business that has potential for growth.
Three verticals, or rather three vectors of growth, then Palmolive being the fourth one. Let's talk about the fifth one, inorganic. What's the plan there? I mean, are you looking at personal care? Are you looking at strengthening your oral care equity itself, which I don't think needs strengthening? What sort of inorganic, what's the playbook here?
So diversification is critical to us. So our first port of call, Palmolive. Our second port of call is really to see what our parent company does and what of that could be brought into India, because Colgate-Palmolive outside of India has a portfolio that straddles many more categories. So we are assessing what of those categories and what of those brands has relevance to this country. So that becomes the second port of call. And obviously I can't give you more specifics than that. And we are also equally interested in inorganic opportunities in this space as well. So we are in conversation on some inorganic opportunities, as most companies are all of the time. And again, not at liberty to give specifics on it, but it is certainly on our radar.
Anything that you're hopeful of closing in this financial year?
I'm really not at liberty to give you some specifics, Mangalam, but suffice to say it's on our radar.
All right. And just before we let you go, how much of the global buy-in has increased in Colgate, the new strategy under your leadership?
So to be fair, I think the global team was always truly committed to India. India was a critical part of the global strategy along with China and the US. It's called out as part of the global strategy, and they continue to be hugely invested in a country where growth remains such a large opportunity.
All right, Prabha, thank you. This has been a pleasure. Thank you for giving us all the 5 vectors of growth, with a promise that we will have a longer conversation very soon.
Done. Thank you very much.
Thank you for watching.